Welcome to Ask the Experts. I'm Jill Schlesinger, editor-at-large of CBSMoneyWatch.com. I'm joined by Jackson Otter. You are actually, I'm going to describe you as Yankee Doodle Dandy because you may have been the proudest taxpayer this tax season.
Oh, boy.
What do you think about that?
Don't even get me started.
What do you think of these new headphones? I'm sort of like, it's weird. I'm feeling a little...
Kind of cool looking. Yeah.
They're okay.
I'm kind of getting blasted here a little bit. But
Hold on a second. Green for MoneyWatch.
They're nice looking. Oh, very nice.
You like that? So we have a very special guest.
We sure do. Yeah.
It's pretty. You want to do her intro? Because you do have the connection with Lauren.
I do, yeah.
All right, do the intro.
Where to start? I mean, this woman not only knows everything about personal finance, which is why we had her here, but she knows everyone in the world. You know, when you talk about 6 degrees of separation, that's Lauren. At her own wedding, and I was there, proud to be there, she had to introduce her husband.
Get out of here.
Because, you know, it was all about Lauren.
Oh,
right?
my God. So Lauren Young, who is the personal finance editor of Reuters.com and Twitterer extraordinaire and
Tweeter extraordinaire.
Tweeter. And you do other things. Like, do you not do Foursquare or some nonsense like that?
And I checked in when I arrived here.
You know,
You're probably the mayor.
I'm not the mayor
You may
yet.
be the mayor of 28th Street. What is it about that whole, you give us like great commentary, but it's constant. So I get nervous, like, why do I want everyone to know where I am? It
Well,
freaks
you know
me
what?
out
It's
a
funny.
little.
I actually check in places usually on the way out. But here I thought I would because we're doing the show right now. So I wanted people to know now to tune in.
And but
thank you for being here.
And thank you for joining us. And we've got a ton of information out here because we're going to be talking about taxes. Jack, would you like to do your rant before we start? Because you have been in such a bad mood since you got your taxes back.
Well, what killed me was the AMT because...
The alternative minimum tax.
The alternative minimum tax. We live in a state with high taxes. We have 2 children, fairly big mortgage, I guess. And so you take all those deductions against your New York income and then bang!
Do we feel bad for him or not?
The AMT takes it away.
No, because I've paid the AMT pretty much every year since I was married. So it's
I've been
just...
paying for years.
So really what you're
this year it
saying
got
is
worse.
misery just loves company. Is that what you... Right.
I guess that's why we're friends with each other.
That's right. I'm only friends with people who pay AMT. But, you know, it is a stinky system. Let's be honest.
It really is. It's a joke. But here's what happened. So I got this awful news from the accountant, and I'm very unhappy about it. And then I get on the subway the next morning and open the paper, and there's GE paying 0 in federal corporate taxes. I know there's been a big debate here because they said, hey, wait a minute, we paid Social Security taxes in state and local. Yeah, well, so did I.
Yeah, right.
But,
welcome to our world.
Yeah, exactly. But 0 on federal income tax.
Now, Lauren, they've done quite a bad job in managing this because I understand there was some tweeting going on about the GE tax situation, and it just made them look worse and worse, didn't it?
You know what? I'm really careful just in general about getting into twit fights. I do not recommend it. Taxes, twit fights, don't do it.
Don't do it.
No, you just it's not worth it.
Not at all. All right. By the way, let me just do some shameless plugs for a second. But download the new MoneyWatch app. Have you downloaded it, Jack?
I have indeed.
For your Android.
And then helping my mood, when I ported my new number, it wiped my Droid clean. So I have no CBS email. I have no MoneyWatch app. No contacts.
Okay. So Jack's in a really good mood. I downloaded the
March is almost over.
iPhone app. And thank God.
Yeah.
And winter is going to end. Because I know it says spring on the calendar. Not so here on the East Coast. Also want to let you know that we are going to be moving Ask the Experts to Wednesdays. It's all my fault. I made Jack move all this. Is it only one meeting that
Just
you have to
one
move?
meeting,
Yeah. There's like 25 people involved, but I made him do it. Anyway, Wednesdays instead of Thursdays. We're going to talk more about that. We'll let you know about that. Not next week, but the week after. Right before taxes.
And this is because you're doing more TV, right?
Yeah.
She's
Being a
star.
TV hoe, pretty much.
Which
Let's
is
get
tax deductible. We'll get to that.
Yeah, exactly. So if you have questions right now, we are here and we are excited because, you know, it is tax season. And I do think that people get completely freaked out about taxes. So, Lauren, what's your kind of number one thing that you do to just get yourself to do it? Like, what is it that people need to think about?
Okay, so I was reading one of the stories we wrote about the guy who runs basically the main CPA at TurboTax, where incidentally I did some work for them, consulting work last year, but he actually always files for an extension. He files his taxes at the last possible date, which I couldn't believe. But I personally keep one of those big accordion folders.
Dude, I just tweeted that today. An accordion
love my
file.
accordion
Love
file.
it.
However, I would like the people who make the accordion files to put them, like, to just make one called taxes, one of the little,
Yes!
rather than the T, which is what I do for, but nonetheless, I'm not going to get into, like, the mechanics of labeling these things. However, I put everything in all throughout the year, anything that I think is going to be tax related in there. And I don't necessarily do it every week. I mean, it might be every couple months or a big pile, and then I, have it all spread out over the floor. And it definitely takes a couple hours throughout the year, but if you can just be organized, which I know sounds so lame.
I know, but it helps.
True. It's true.
Jack, what's your number one tip as you start your season?
Well, I'm going to rant again here.
Oh, for God's sake. You're sounding like the
just-
angry white man. You know that, right?
I am one of 250,000 people in the entire nation who pays taxes on our nanny. We pay Social Security tax.
No, I do too.
You are.
Yes.
You are one of the other. And
Oh,
my
my
brother.
God.
And that's three of us. But it's amazing that there are only 250,000 people in the entire nation, according to the IRS, who actually pay this tax, when obviously there's more than 250,000 people in New York City who have nannies.
Well, no, my joke is that I don't believe that women live on the island of Trinidad because they all have to be here on the island of Manhattan.
Uh-oh.
Exactly.
Victoria is getting a little bit like, well, we're veering into scary territory
Okay.
here. Victoria is subbing in for Megan, who had a baby girl. Thank you. Yay, Megan. We love you and we miss you. I'm sure she's watching. Okay.
But the nanny tax
Nanny
is
taxes.
tough.
Yeah.
So that's why I don't have kids. I don't have to pay nanny taxes.
Perfect. Yeah.
School, college tuitions, don't have to worry about. I will be old and decrepit and relying on my nieces and nephews, but I think it's a good trade.
Oh, no. When we're old and decrepit, we're going to be asking her for money.
Yeah, exactly. Yeah.
Oh,
You
my
can hire
God.
help, believe me.
My number one tax tip is that as you are just sort of going through all that paperwork, I like a nice, neat scotch by my side. That would be just relax. You're going to get it done. You know you're going to get it done. And you can always file for an extension and just make sure you pay whatever taxes you think are due. And if you're really short on cash, you're going to have to deal with the IRS anyway. So you're going to do it. Deep breath, glass of scotch, maybe wine, bourbon if you're Jack. Lauren, your vice?
I'm so not a big drinker, but I would have a glass of Prosecco.
Ay,
I had some
vey.
Diet Coke while I did mine. Yeah.
That is so lame.
I know
Okay,
it
let's
is.
get to some questions here. First of all, we got a lot of questions in general, and we have a lot of resources on the site and 16 tax deductions. We have things that you should look for in your tax return, and we're going to have all this stuff, robust information at MoneyWatch.com. There's plenty of stuff at Reuters as well.
Totally. We just published another iPhone app today.
All right,
Tax
so there
story.
you go.
And we should diverge for 20 seconds
Do
from
it.
taxes to opening day?
Oh.
So we can talk about the great story.
Exactly. By the way, Roland, if you wouldn't mind putting this screenshot up, because Jack is so proud of this. So, first of all, on the front page of the website, we have best baseball teams for the Buck. So Jack, in collaboration with Nelson here at MoneyWatch,
And Eric Schoenberg.
and Eric. Oh, who? Oh, wait, our editor in chief. Really, Jack, tell the genesis of the story was that you guys were trying to figure out what's the best bang for the buck you spend? Like, are you having fun? Are they winning, right?
Exactly. I mean, we want to do a kind of an economic analysis of baseball tickets and what are you paying for? How much do you get for that dollar? And so we looked at home runs, runs scored, strikeouts, and wins for the home team when they play at home, because that's when you're going to go.
Right.
And we compared that to the ticket price. So obviously, the lower the ticket price, the cheaper the home run, the cheaper the strikeout. And so the good old Yankees and teams like that are way down on the list. And the Arizona Diamondbacks came out on top, just barely edging out the Atlanta Braves. Nice cheap tickets. They hit a lot of homers at Chase Field. And so it's a pretty good deal for the
Now,
fans.
isn't it also true that the D-backs have a pool in that stadium? I believe they do because it's so freaking hot in Phoenix in the summer that there is a pool in the way
know
back.
that.
Yeah.
Wow.
So that to me is a big winning ticket. Okay. I love baseball, but I can't discuss it because I'm a Mets fan right now. So it's very rough. Okay.
Phillies.
Phillies. Look at her. Rock on.
You and my daughter.
Oh, my
I love
God.
Phillies. Oh, that's awesome.
Okay, here we go. You ready? Let's get to these questions.
Yes.
If you've got a question, ask the experts at MoneyWatch.com and jump onto the chat. Okay. And look at this. Everyone's in the chat room is talking about the new iPhone app is great. How about
Wow.
that? Nice. All right.
We've
Well,
got a
thank
story
you.
about that, by the way, but Dan Cadlack, if someone wants to read more about it.
Yes. Okay. Here's one. Ken wants to know, I purchased an airline ticket to a foreign country to do charitable work in 2010. Now, you can deduct travel for charity. So he purchased the ticket in 2010, but the charitable work will take place in 2011. When does he claim the tax deduction?
You know, it's interesting because I do that all the time, too. I mean, I don't necessarily I'm on a couple boards, and for travel for the board meeting, I actually think I'm going to be going to Germany a couple weeks for one of my boards. That's something I would ask a professional because I think that's one of those gray areas.
I think you do it in 11. That's what I think. I think that you claim it in 11 because that's when the travel occurs, or do you think it's when it's actually purchased? That's the question.
The fact is, the service is not delivered
until 11. That's what I'm thinking. All right, we're booting it to go check it out, but we think 11.
And you know what? The truth of the matter is, so much of taxes, and we're going to have this conversation. I really do strongly suggest. Everyone's so personal, and your issues are going to be personal and your money. So it is worth it to find. And there's lots of free advice out there too. So
yeah, okay. Now we got a couple of questions about loan modifications and short sales. So let's get to those. Alvin says, "Hi, Lauren." Hi. Okay. No, Jack and I are irrelevant. Whatever. Hi. I moved to my rental residential property in 2010. Chase Bank issued a 1099 for $76,000 as forgiveness of debt. The property value in our area went down, I'm underwater, all combined assets are I don't want to file bankruptcy. Is the 1099-C for $76,000 taxable?
Wow.
Yes, totally.
Yeah, but you know what? I think if you don't, I'm thinking more about the bankruptcy part of it. Mm-hmm. And this is one of those call the IRS situations.
Absolutely agree.
And tell them, and and do it now. Don't wait because, I was telling the statistic before that about a third of people file their taxes. They wait for the last 2 weeks. So this is when the IRS phone lines really start to ratchet up. But I would absolutely work out a payment plan with them for it, and so that you don't file for bankruptcy.
Okay, and by the way, when you file for bankruptcy, the IRS still gets paid. I guess anyone, it does not wipe that debt out. You always owe taxes to the IRS, so that doesn't get wiped out. And what we're talking about is when in a short sale or if you have defaulted and the bank will issue something that's called forgiveness of debt. It's the money you owe them. And because they sort of wiped the slate clean, it doesn't mean you're off the hook. It means that you actually owe the government money because that forgiveness of debt is essentially income.
Yeah.
And so I agree. You got to get in touch with the IRS. You got to tell them what's going on, and you got to set up a payment plan.
And you know what I do just for the heck of it? Write your congressman and your senator because there's a lot of people in this situation, and I could see a movement towards some kind of a law that would forgive this because it is pretty rough. I mean, you're in a horrible situation.
Yeah.
It's not as if it really isn't income. Mm-hmm. I mean, what it means is you bought something that's too expensive. The price has gotten marked down, and you're getting billed for the difference.
Yeah, we actually had another
question.
Taxed
on the difference.
We had another question from Alan who said, we lost our home to a short sale in 2010, and we used the last of our IRA money, $58,000, to buy an inexpensive place. Do we have to treat the disbursement as taxable income of that IRA?
That's a hardship withdrawal.
Or is there any way around it? Since we bought our primary home with it in 2010. Now, you don't qualify. The home purchase doesn't qualify for it because it has to be your first home, right? It's a first-time home buyer. But you think a hardship withdrawal, we should get it.
It could be a hardship withdrawal, but the hardship withdrawal is only up to a certain amount.
Right.
So I guess this is one of those. You guys are throwing us these questions that have like 4 curveballs in them.
I know it. I know.
Like if it was one pure thing.
But I think that you're going to probably have to treat it as income, and it doesn't just because you had a short sale doesn't mean you had a hardship withdrawal. That's the problem.
I read the IRS. I'm such a tax geek. Mm-hmm. I get all of the judgments every day that come down because people challenge these things in court, and this would be one of those things that I could see making a case.
Absolutely.
And and the tax court could or could not judge in your favor, but this is a really complicated one.
Yeah.
Can we jump in also? And this doesn't help this guy, but just to remind listeners that we are not in favor of rating your IRA or your 401k to do this. I know they're in a very difficult situation, but look, renting is not that bad. I would tell somebody in this situation to rent for a while, keep that money for retirement, and then in 5 or 6 years, and also, I'm interested by this because unless they bought a house for $58,000.
That's what they're saying.
Right.
Oh, I see. The entire thing.
Yeah.
Okay. Well, maybe that's a decent investment then, but it still scares me.
Yeah. Pam said she received a modification on her mortgage she's been paying on for over a year. Last month, she was given a reduction in principal of $1,000 for making it through the year with an on-time payment.
Go Pam.
Right.
Yeah, absolutely.
I will be receiving this reduction for a total of 5 years. What are the annual tax consequences to this as well? And how does it affect my cost basis in the long term? Which I believe that this is the same deal. This is this you're going to have to check with because it's not necessarily forgiveness. It's a bonus, isn't it? So when you have the reduction in principal, chances are what I'm guessing is you're going to lower your basis by that amount every year.
It's a taxable event.
Right. But
it also, this again, who are these people?
They're awesome.
They are awesome, but this is complicated stuff, people. That is a really interesting question too.
Yes, and we have to say that look, we aren't accountants. We're CPAs. We're just people who are in the business of covering this stuff. And
right, and the truth of the matter is, we can always follow up and ask some experts for you too.
Absolutely. Here's a great one. Jeffrey wants to know: I had a audit by the IRS for my 2008 tax return. I ended up having to pay an additional $9,000 in taxes and penalties. The full amount was paid in 2010. Is there any way this becomes a deduction?
Oh, good
I
try,
love that.
Jeffrey.
That is such an awesome try. I give you 5 stars for that.
You're so cute. But
yeah.
No,
you don't get that. It's just what you owe.
Now, if you write an article about it for CBS MoneyWatch or Reuters.com,
maybe
you may be able to push it a little bit.
But that's about it. Elizabeth wants to know: last year I had a little realized income, good investments, but I think what she means is she had income and unrealized gains. Okay. So I thought it made sense for me to convert approximately $100,000 in IRA funds to Roth IRA and pay the taxes before the rates go up. I'm going to pay the taxes from funds that are not in my IRA or Roth IRA, which is very important because we do not want you to convert if you have to use the money from within your retirement account. That said, she's in her mid-50s, self-employed, and her question is, are there any gotchas in the tax code, forms, or anything else of which I should be aware before I file the forms and pay the gigantic bill?
Now, you do get a form from when you do the conversion.
Yes.
And obviously that's where you pay your taxes from. Are there any gotchas, Jack?
Form 8606, by the way.
Woohoo!
I just looked that up.
The only gotcha I can think of is if she should have, she says, approximately $100,000. If she has other IRAs that she is not converting, then there's a formula for, am I right in that? There's a formula for figuring what her total IRAs are, and she could end up getting dinged for more. Am I right on that?
I don't know. I was just going to make sure that she was going to use the 2-year exemption.
Absolutely.
I mean, the 2-year period that you can spread your tax liability out over.
I just want to make a little point here, too, is that if you do a Roth conversion, sometimes it pushes you out of the AMT.
Oh, really?
Yes.
How so?
Because you're getting to a higher tax bracket?
Yep. Yeah, so it can actually nudge you.
Yeah.
It's that's like one of those, you got to crunch the numbers and see if it works in your favor.
Wow.
But it's one of the very rare ways to avoid paying the AMT.
Oh, my God.
Well, that's one of the wonderful things about the AMT is that if you're richer, you don't have to pay it. It sort of nails the people in the middle.
And that is what's so crazy about
exactly.
it, actually. So I don't think there's much you really have to worry about on that, except that you're making
by the way,
sure. I know that.
Okay, I realize viewers might not get that.
But you know what, Pam? You did absolutely the right thing. I think that
that
was smart. A really smart idea.
Cash flow. Yeah.
Me too.
All right. Now, next. All right. This is wild. Anonymous wants to know, 44 in the process of divorce.
Ooh.
This is like our age bracket. Have you noticed that like a lot of people are getting divorced now? It's the wildest thing. I was just talking about that with my sister. It's like every day I find out like, oh, here's where that 50% number comes in.
Yep.
This is wacky. Okay. Trying for equitable share of property. I lost my job a year ago. No prospect as of yet for another. How do I treat spousal IRA, 401k, and tax consequences to me? Not just transfer, but contributions, loans, and how they are regarded. Here's the deal. When you get divorced, there is this thing called a quadro. Okay, a quadro. Is that cool that I am totally like, woo? Am I showing off right now?
I thought that was what the rebel forces in Star Wars used to attack the Death Star.
Isn't that an Audi?
Yeah, exactly. It's the new Audi, right? So a qualified domestic relations order. And what happens is by law, when you file a quadro, it means that you get access to your spouse's retirement account and it can move into your own retirement account without any taxation. Now, if you don't file this form and you, let's say I'm married to Jack. I should be so
We
lucky.
always are, Jack and Jill.
I know. So I'm married to Jack, and he gets half of my $5 million retirement account. Woo-hoo! I wish. Like, I'd really be doing this if I had $5 million in the bank. So then if I just literally cut him a check for that, that's taxable. If I have a quadro, I present the quadro to the court, orders it. It's a stamped document. It gets presented to the brokerage firm. The brokerage firm basically takes that money and does a wire-to-wire, tape-to-tape transfer for whatever amount is due from my account into Jack's account. No tax event. Quadro, though. You got to have a quadro.
Now, is that something that people would commonly know?
If you have a divorce, if you have a divorce attorney, you
a good divorce attorney should know that.
And that's why a lot of people think that even though, you know how everyone says, well, we're going to be nice, we're going to go to arbitration. Well, a lot of problems in arbitration have occurred because a lot of arbitrators are like social workers. They don't know the ins and outs of the law and what happens on tax basis.
And you know this, Jill, obviously, that there's a whole area of personal finance planning and financial planning now. There's actually certifications for divorce, which is it's a viable business. And so there, I would think if you did an arbitrator, you should have a financial advisor who specializes in divorce.
Yeah. For sure.
Divorce is expensive. I'm glad to say I haven't gone through it, but it is
And
pricey.
I have. And talk about, if you think writing a check to the IRS is painful, let me tell you something. There are way more painful checks that you write. Although my brother-in-law does call it the best trade I ever made in my life. All right, back to your questions. Oh, Eric wants to know. He's in the chat room. If I pull money out of an IRA or a 529, how do I prove to the IRS that I rolled it over or spent it on college, as the case may be?
Well, for the rollover, you often just do it directly. So the paper goes from point A institution to point B institution. I have not paid for college yet, but I would assume you have, because I have a 529 in New York State, which I highly recommend.
Yes.
And I'm a big fan of 529s, but I'm assuming you use your tuition bill, right?
Yeah, I think you just have, in New York, have Vanguard 529 plan, just pay the college.
Right. And then you have to prove, if they ask for documentation, I think sometimes you have to send the bill in. When I was an advisor in New England, I remember that there was actually a request from the college, like, I didn't actually remember, like, where was that bill that you sent me online? And they sent it in to the Rhode Island State 529 plan.
But I have to tell you, I just rolled over some money from my Vanguard IRA into my employer, my 401k, for a myriad of reasons.
Wow.
But the paperwork, and I'm somebody who knows what I'm doing, just finding the right form was Byzantine.
Really?
Real on both ends. So,
now, wait a second. Why did you do that? Because that is a very...
She
loves Reuters. It's a very
Yes.
contrary thing because people love having their own IRA accounts wherever you can have it parked wherever you want.
Right.
Does Reuters have such a good plan? And
it
are we
is
going to be so
it
jealous?
is a really good plan. No, they're
CBS
both
plan
good. I
sucks.
use target date funds, and this is tax related, so I feel like we can veer off in this conversation. But even though you say never to take a loan or anything, I wanted to have that ability in case we want to buy, because for a first-time home.
Oh, gotcha.
Because since rates are so low, and that you can't take a loan from your
IRA.
but you
Correct.
can from your 401k. So I thought just have the money there, just in case.
Oh my God!
And now the folks at Reuters know you're not looking for a new job because you
Really?
have to pay that
I
back.
pay it
That's
back.
right.
If I leave,
That's
I
right.
have to pay it back within 90 days.
Damn, we can't hire.
Yeah.
But wait a minute. I thought that most 401k loans were maxed at 50 grand.
Correct. So I had to roll over double
Yeah.
the amount. But that's okay. I mean, it's still something.
Good Lord. It's okay with me.
Yeah.
50 G's, whatever.
Yeah.
And one point on the rollover, when I just rolled over an IRA a 401k into an IRA.
All right, I knew we were going to get to this. Why don't you talk about that? This was the best trade of
No,
the year
no,
for
no,
you.
No, all I was going to say was that they actually made it out. It was a Schwab 401k to Fidelity, and I had them make out the check to Fidelity Management
Yes.
Company.
Yes.
So, the IRS wouldn't
Same.
even see that, see
my
my
check
name
was
on
made
it.
out. Exactly.
Yes, it
my
should be
same
with
thing.
your
Your check is not
custodian.
made out to you. They
Yeah.
put it's like Fidelity Management Company / Jack Otter.
Right.
So they know who it is, but it's not made out to you. So this is we went on a long trail, but hopefully we answered your question, which is that you're going to be fine.
And Jack, when did you blow out of that account to roll it in?
Well, I'm not quite as proud as I used to be of this, but I did blow out at the top of the market in 2011 and had it transferred. So I was in cash when the market hit the bottom, and then I remained in cash while the market climbed back up.
I can't believe it. You talked about actually doing something.
I did put a little bit into an index fund, but I didn't commit at all.
This is, by the way, the problem about trying to market time.
Yeah,
because you
exactly.
don't have to make one decision, right? You have to make two decisions.
Right.
Right.
And incidentally, my money is in the process of transferring right now, so I think I've missed whatever's happened in the past few weeks.
You haven't missed
And
anything.
my wife and I are actually slightly overweighted stocks, just a teeny bit. So it's not a terrible thing.
All right. Here's a question from Ashley. I work in Pennsylvania and I moved to New Jersey in mid-year. That probably was not a good tax move, I just want to say. I already
For
filed.
gas is cheaper.
Yeah, that's about it. And they fill it up for you. I already filed my federal and state taxes for the year using Pennsylvania forms. And I was told to file for the state in which I work, but I'm wondering if I made a mistake with that. I still need to fill out my local, but I'm not sure if the local income tax box on my W-2 showing partial income for the year is all I need to file. Blah, blah, blah. Do I need to refile federal and state, one form for PA and one for New Jersey? How would I split my income and taxes to do that? What do you guys think?
You do have to file to
Absolutely.
both states.
You gotta- you have to amend.
I've worked in 2 states before, and it's really a pain, another pain. However, you get to deduct, so you do get a deduction from one to the other.
Right. And you really have to you don't have to probably refile your federal, but you
No.
do have to you have to file that second state return, and you're probably going to have to amend the first state return because you're going to have some credit available to you from one or the other.
Yeah, it can end up working in your favor. It really depends.
But doesn't it also depend on which day she moved? I mean, if she lived more than half the year
Right.
in one state, then isn't she considered a resident for tax purposes?
Yeah, but I think you're still supposed to file, and it's a percentage, because I did this also. I went from Rhode Island to New York, and in that year, all my account did was a straight up percentage of the time that I spent in each state.
Okay.
And it was a cleaner way to do it. So I think you're going to have to do it. That's just my 2 cents. Okay, check this out. We got another one here. Oh, here's Marianne, also known as my boss, who wants to know, is there any tax advantage to opening an IRA for this year if I've already maxed out my 401k?
You don't get if you max out your 401k, that's the maximum retirement deduction. But the tax advantage is if you did a Roth,
Right. If you
So-
qualify for a Roth,
right?
then
if
it
you
is
did
worth.
it's worth it.
Yeah, absolutely. And what?
And the reason why is because Roth, you pay the taxes up front. We should just be clear.
Yes,
when
absolutely.
we're tossing around these terms like
everyone
You pay
knows.
Everyone
taxes
knows.
up front, but then you pay no taxes
on the way out.
when you take it out
Correct.
with those monstrous capital gains that she will reap by following our advice on CBSMoneyWatch.com.
Correct. Now, there's one other thing that I just want to ask you guys what you think, because we've always been, we've always talked about extolled the virtue of the Roth. Is there a possibility that this gets reversed? I've gotten that question before. Is it
Too.
possible that we kind of look at the government comes and says, you know what, this is way too good a deal.
Well,
We're
that's
done
like
with that.
home mortgage interest deduction
Right.
too. I mean, actually, that's the thing I'd be worried more about because it impacts more people. Is right now you can deduct your mortgage from your taxes,
But what do you
helps.
think?
I can't imagine. Now, anything is possible, but it would seem to me what they'd do is they would just simply say, okay, we're going to end this deal,
I
but
think
we're
so,
going to
too.
grandfather anyone who's in there because, it's pretty rough to tell somebody you made big financial decisions based on rules A, B, and C, and now we're changing that.
But that has happened in the past. I mean, there have been changes. There have been changes to treatment of real estate, and we've had how people were buying investment real estate and being able to deduct that, and the rule change in the 80s. So, I mean, it has happened. There is precedence for it. But I don't think that the mortgage interest deduction is going away. On that one, I actually think that they're going to try to income test it, or they're going to say
Right.
over a certain amount. If you have over $1 million mortgage, guess what? You don't get to deduct the whole thing, or you get some partial
So then you get to
phase
pay
out.
more AMT.
That's
Woo!
right. That's right.
And one other aspect to this is the fact that we are heading toward a retirement crisis. As Social Security is a little bit wobbly, the people who had pensions are fewer and fewer, and more of us are relying on 401ks. And so to take away basically, 15 to 30% of these nest eggs just doesn't seem like a good idea. And it's not really in the national interest because a lot of these people are going to end up requiring a handout anyway. Because,
Right. And everyone's going to pay for it. Carolyn wants to know, my husband and I earn relatively the same amount of income and have no claimable dependents. I'll try to find those claimable ones. Should our withholding status be single, married, or married but withhold at higher single rate with zero allowances to get the best parity from our earnings while taking care of Uncle Sam? How do you want to work that?
See, this is also where the state that you live in
Yes,
comes into
exactly.
play. Because if you live in a high tax state, it might work in your favor.
Right.
But if you live in, it really all depends. That would be your advice too?
Yeah. And I also think that this is one of those cases where there are downloadable tax prep forms that are everywhere. Okay. You just literally write in downloadable taxes. The thing that you have to be very careful about is that I find that sometimes if you just kind of walk into your HR person's office and you say, could you do me a favor? Tell me what this looks like on my paycheck, because you also want to make sure that you're not adjusting to such a high withholding that
health insurance for one. There's all sorts of things that come into factor when you're married,
That's
your
right.
health insurance. So
you really, and so in those cases, you can play with it a little bit. If you have an accountant, make him or her do that work. There has to be some value to an accountant these days.
Now, unless something has changed, can't they also take a look at what happened this tax year, for
Absolutely.
instance? If you ended up writing a $10,000 check to Uncle Sam, well, it's kind of irrelevant. You got to increase your withholding or else make quarterly payments.
That's right. We will be having an article about lessons from your tax return.
Yeah.
One of my first. Eileen asks, I am a consultant and speaker. I need to buy special expensive clothes that I wear only for work, but they are not a uniform, just good suits and accessories. My accountant said I can deduct these. He also said that I could deduct some of my hairstyling charges. My hairdresser says that clothing models have been fighting this battle for years and are not able to deduct hairstyling expenses. Who's right? Who do you think's right, Lauren?
Well, Jack and I have been having this debate amongst the two of us for years too. So Jill has some love she wants to share in terms of this. Tell us your experience.
So my experience is that I used to do a lot of television when I was a financial advisor, and I was told the same thing. You cannot deduct anything because it is not your primary business. And if it is not the thing that you do, number one, I'm surprised that models can't do this. That seems like redonkulous to me. And so it also makes me think that they're trying to deduct something that they're already deducting. They're already getting reimbursed for. So if you are not getting reimbursed for that, which I don't at CBS, and if your duty is to be on camera, your accountant is right. You should be able to deduct it, but you got to prove that you can't just say I got a gown at Saks for my sister's bat mitzvah, and I did that. But you have to be able to prove you used it for work, save all your receipts, and I think you should be able to deduct. But don't be a pig about it either. Because, you don't wear those clothes.
Honestly, if you really wanted to be super diligent about it, take a picture when you're up on. Have someone take a picture of you on the podium wearing that outfit or a video, and then you've got not a paper trail, a digital trail.
Digital trail, nice.
If this is this woman's primary business, do you think?
Yeah, I think so, because she's like, but if you're a consultant and if you're a speaker, you could say, hey, I'm going to deduct some portion against my speaker's fees.
That's where I was
going. If you're a
yeah.
consultant, you're not going to be like, I'm in this guy's office and I have to dress for, we all have to get dressed for work.
Right. So let's hope that it's actually a different form where she's filling out, it could be considered a side business perhaps as a consultancy. She makes X amount of money and she's deducting it from that, not from her ordinary income on her 1040.
This is actually something Jack and I have fought about.
Clearly. I'm sorry to wade into this
That's
now.
okay.
No, we just got different. Oh, it's very simple. We just got different advice from different accountants.
What did Gary say?
Gary said no.
Right.
Yeah.
That
but
I can't.
I think that
I wore this suit on TV today, and here I am again, but Gary says no deduction.
Right. But I think that if you were, say, Brian Williams, that you would be able to.
People often mistake me, yeah.
Which often happens, exactly. But I think that let me see your chin. Okay, yeah, I think I see it. Again, it's the white guy look. Ay, what am I?
Take off the glasses.
I know. Don't do it. Don't do it. Oh, it's perfect. All right. Now, 20 million taxpayers either pay a professional or shell out money for some income tax software, and they don't owe any income tax at all. That's what the GAO says. And Lauren, you say that about a third of all people are about to start their tax filing.
2 weeks. A third do it in the last 2 weeks.
If you have further questions about your taxes, Lauren's available. At Lauren Young.
At Lauren Young.
Is her Twitter account, her Twitter handle.
And if you go on Reuters.com, you can find all my digits there.
She can find everything. You'll know that where she is on Foursquare. Jack Otter.
And because I've been the downer guy today, I'm going to say something happy.
Oh, my God, that's fabulous.
The IRS.
Oh, God. Here we go.
The website is actually excellent. It's amazing. I mean, you're thinking this is a government website, this is a bureaucracy. It's really good.
Yeah, and if you go on the website and you search anything, it's actually it has a great search engine. Yeah. And there is a new IRS app, IRS to Go. How about that? It's true. It is. There's a new IRS
When you
app.
miss the IRS, it's
Exactly.
there
I
in your
miss you.
pocket.
Exactly.
Yeah.
So we're going to finish up the program. If you've got questions that we didn't get to, just shoot us an email, asktheexperts@moneywatch.com, and download our brandy new app. Victoria's wrote that on the board, which I love. Thank God. Someday I'm going to turn the camera on the producers. That's what's going to happen. It'll be
You can get
our
it in the App
revenge.
Store. You can just on MoneyWatch. There's something. There's lots of ads for it, so you'll see it. Yeah.
So your Android or on your iPhone. So
Right.
yeah, that. And remember that Ask the Experts is moving to Wednesdays in a couple weeks. So that will be very fun and exciting, and we'll let you know about that. But if you've got questions, again, shoot us an email, send us a tweet. Don't call. I'm all over the phone. I'm done with the phone, by the way. I really am. I'm so sick of
When the phone rings, I actually kind of get angry now.
Yeah, exactly. Who's calling me?
Victoria.
Victoria called
She
you?
called me and I was like, who's calling me?
Who is this? Don't call us. We'll call you, as they say. Anyway, thank you so much for watching Ask the Experts. I'm Jill Schlesinger.
I'm Jack Otter.
And this is Lauren Young. Woo!
On Foursquare.
Special guest star. Thank you so much for joining us.
Do not pay your taxes with your credit card.
Do not pay your
No.
taxes with your
Good
credit
tip.
card. And always wear powder on your forehead. Thanks for watching. We'll see you next
Go
week.
Phillies.
Blazing on a sunny afternoon, and I can't sail my yacht. He's taken everything I